Hey everyone, and welcome back to the channel. Today we are going to know what is decentralized finance, DeFi. Let's get right into it. Decentralized finance, or DeFi, is a novel approach to banking and financial services based on peer-to-peer payments and blockchain technology. DeFi enables trustless banking via blockchain, bypassing traditional financial intermediaries such as banks and brokers. What are the benefits to investors? DeFi promises to enable investors to become the bank by allowing them to lend money peer-to-peer and earn larger returns than those offered by standard bank accounts. Investors can also move money instantly anywhere in the world and use digital wallets to access their accounts without having to pay traditional banking costs. Here's how DeFi works, how it might help people, how it differs from traditional banking, and what risks it poses. How does it work? DeFi's mission is to employ decentralized technology to deliver many of the financial services that users and businesses presently enjoy, such as loans, interest on deposits, and payments. DeFi, in fact, alters the industry not so much by changing what it does, but by altering how it does it. DeFi, in other words, establishes a new infrastructure for the delivery of similar financial products and services. It accomplishes this through the use of blockchain technology and smart contracts, among other methods. Blockchain is a type of ledger technology that keeps track of all financial transactions on a specific platform. Consider it a chronologically recorded running record of all transactions on that specific blockchain. If person A pays money to person B, that would be timestamped permanently in the ledger. Alexander Lutskevich, CEO and founder of CEX.io, a firm that facilitates DeFi and cryptocurrency, says, "The building blocks of DeFi are smart contracts, which are executable codes that can store cryptocurrencies and interact with the blockchain according to its rules. Smart contracts enable DeFi by automatically executing transactions between participants. They self-execute their set of instructions once the contract's requirements are met. Cryptocurrency becomes the de facto money for transactions and records in this universe." David Malka, CEO of yieldfarming.com, says, "DeFi is the natural continuation of the vision outlined in the Bitcoin white paper of creating electronic cash, so it is a very exciting time in the industry." Perks of DeFi. Individuals may profit from DeFi because of the possibility for increased security, lower costs, a wider range of services, and the ability to earn more money from their crypto holdings. These and other advantages are made possible via decentralized apps developed by various groups. Lutskevich says, "Decentralized applications, or DApps, allow people to transfer capital anywhere in the world with fast settlement and at a low cost. Peer-to-peer borrowing and lending, crypto exchange services, NFTs, and more services like crypto wallet and storage solutions." In other words, the only constraint is your ability to code an app that allows your commands. The capacity to earn money is currently a prominent perk for Bitcoin investors. Crypto staking, for example, allows coin owners to contribute to the coin's ecosystem while also earning money by validating transactions. It's a type of farming known as yield farming. When bank interest rates have been at rock bottom for years, this has been appealing. Many DApps require liquid cryptocurrency to be available on the app in order to deliver their services. As a result, they offer income or a yield in exchange for investors putting their coins up for a period of time. In effect, they pay individuals who offer liquidity and income, similar to interest given on deposits at regular banks, but riskier. Cryptocurrency owners can farm yield through various services, such as providing liquidity in a coin exchange, depending on the type of DApp, peer-to-peer lending to a borrower via a smart contract, staking in a proof-of-stake coin like Ethereum, and borrowing against holdings and farming those borrowed coins. As a result, these techniques of generating yield provide another source of profit for investors, while crypto gains will be subject to the same taxes as traditional sources of income. Risks of DeFi for investors. As promising as it sounds, it also has its own fair share of risks such as complexity. It's not as simple as going to your local bank to participate in DeFi. Malka says, "DeFi can be a challenge for beginners to navigate because of the massive amount of DeFi applications and investment opportunities out there." He then added, "Even the onboarding process can be confusing for some people because you need to move money from an exchange like Coinbase into a non-custodial wallet, such as through MetaMask, to begin accessing the world of DeFi. There's also outright scams. Many scammers are attempting to trap new crypto investors who are attracted by potentially higher returns than those offered by traditional financial institutions. It's possible that a high yield is too good to be true. A Aside from the obvious scams, it's feasible that crypto coins could be taken through breaches, especially given the flaws in some DApps coding. CEX.io's Lutzkevish says, in these exploits, funds can be lost, and then it comes down to the core team behind the DeFi project to decide how, if at all, to compensate the participants. Those interested in expanding their knowledge of DeFi beyond the basics of cryptocurrency trading should proceed with caution and ensure that they engage with a trustworthy counterparty. Though DeFi's yields are appealing, don't let the possible profit blind you to the other risks. Any tiny gains via yield farming could be swiftly wiped out by a downturn in cryptocurrency markets, and outright scams or theft could wipe out your crypto fortune much faster. That's it for today. If you guys enjoyed the video, make sure to hit that like button. Don't forget to subscribe and turn on that notification bell so you never miss out on any future content we'll produce for you guys. We're signing off now, but we'll be sure to catch you all in the next one.